So we have Sunil Subramanium joining us now to talk more about markets. Sunil, good morning. Thank you so much for your time. You're touring in Gujarat.
Yes.
That's what so must be enjoying the chill a bit. Well, markets also in kind of a holiday mood right now.
Yes.
So talk to us about what is your observation been so far? Very good run. The macro cues, all of that are also pretty positive. How much of this is already getting into the price now?
I would say that actually it's not fully into the price. And the reason I say that is that, see, this is the period when you have hedge funds booking profits. Those who entered 6 months, a year and a half ago, the Indian market has been one of those where they have made the best returns. So as you know, hedge fund managers need to book profits before the year end in order to be able to receive their bonuses. So at this time, we have suddenly got this flood of good news for India. Right, you have the election results, which gives you policy continuity. You have the oil prices, which are stable, and you also have the scenario in the US of a rate cut right up to 2026. So everything looks good, and so a lot of you saw about almost 60,000 crores has come in post the election result. Right now, this would actually be a gross of maybe 70 or 80 because there would be profit booking. So this week, I think that we'll see a consolidation because as it gets closer to Christmas, one, fund managers go on holiday, so there'll be less activity. But also, like I said, the remaining profit booking to be done would be done. So I would say that the rest of till the new year, I would expect this to consolidate. But in January, I expect a strong, further inflows to come in from FIIs and take the index to new higher levels. And that will mean that the hedge funds with book profits will come back in. And from a perspective of the market, I think that India still justifies the premium that we are charging because in a world that is slowing down, our GDP numbers are coming out better than expectation. I expect the next quarter's GDP and the EPS numbers to be good because the festival season would reflect in those numbers.
Well, Sunil, hi, morning. Speaking of the
Hi,
festival season, don't know if we've really seen that much of an incremental uptick across sectors, and that has been acknowledged by corporates from across the board. What's your outlook in specific when it comes to some of the consumer-facing sectors, and how do you expect these individual pockets to perform for the year ahead?
I think the top line growth has been good. Festival demand has been good. And I think it's the key is how are these on margins? How much of discounting has happened? How much have they given up on margins to achieve the sales? That only the earnings guidance starting from Jan 10th would tell us. But overall, I got a sense from a broader sense that the festival season has been good. There have been pockets, okay, which may not have lived up to expectations. But overall, I'm quite happy with what I've heard so far on the street. And I think the EPS numbers, of course, we'll have to wait and see for the guidances. The second thing is that on consumption, what gives me confidence, independent of the festival, is that in the run-up to the election, right, there's going to be liquidity pumped into the economy, both because the government would try and do a lot of direct benefit transfers of subsidies. You will probably see a lot of liquidity flowing into the economy, and that would give a boost to mass consumption. So I'm optimistic that not only will the festival season numbers reflect well, the guidance in January for the next few months will also be good. And then the summer, as you know, last two summers have been disappointing from a consumer discretionary perspective. Hopefully this time around with the election around, the consumer discretionary story will also step up during summer. So overall, I'm fairly optimistic, though on the EPS side, we'll wait for the numbers to take a call.
Okay, fairly optimistic on the market. Before we move forward, just wanted to flag out a few more stocks from the auto basket. There are some movers. So TVS Motors, Ashok Leyland, some of the names which are showing decent amount of volume traction. And then from the mid-cap space, you also have names like Yatra which are perking up. J. Kumar Infrastructure is something that we have flagged out. And there is BEL, which is actually going from strength to strength. It's actually now up 4%. It started off with a paltry gain of 1.5%, but now building on to gains. And take a look at NLC India. Not really sure what transpired there. There's a 8% rally there. All Cargo, Nesco, as well as LT Foods. These are some of the big buzzers. On the losing side, IREDA is seeing some profit booking. Finally, that stock is coming back closer to around 100 rupees. Sunil, hi. Anisha also joining in the conversation. My question to you was on the IT pack. Do you think this news flow that happened over the weekend, where in one of the MOUs of $1.5 billion got cancelled for emphasis, do you think this could just spell bad news and there could be more to follow, or one should not read too much and take it as an isolated event for IT?
Two things here. Yes, specifically there was a bad loss for that specific company. But remember, if one company loses, another gains. I'm more looking at it from how's the overall IT demand. You see, there will always be winners and losers between companies as they fight for market share. So I think stock specific, there are obviously actions which fund manager would take. But overall, if you look at the IT pack, only two things are there, right? And they are slightly contra in flows. One is that the world in a slowdown would not mean great news for IT as a growth. So I would say high single digit growth to low double digit growth is the max you can expect, not any roaring high double digit growth from an overall IT pack. Number one. At the same time, if you look at the scenario around flows and the rate cut scenario, you're going to see a lot of flows into India. And what we see is that a significant amount of those flows are passive flows. Now, the thing with passive flows is they buy everything in the index. So I expect IT to get strong buying support from FIIs because it's part of the passive flows. And even within active flows, there's a safety element to IT. So like I said, company specific, there could be a rotation of business around the pack, but IT represents a safety-oriented sector for an FII. So I expect strong buying support in the IT, so it won't fall great. So I expect IT to be a consolidator. I think that it will not show a breakout either way over the next few months, but it's something that should be a key part of everybody's portfolio because these are good companies, solid companies, well researched, well aware, and the FIs are aware of their buyers, and hence the knowledge level is quite high. So I would say that we should hang in there in IT on a consolidation basis, but a fresh breakout in terms of their growth would only happen when the world comes back to a growth path.
Sunil, how are you analyzing the move which some of these two-wheeler companies have already seen in the last few months? And if you could pull up the charts for the last 6 months of TVS, Bajaj, even Hero, versus the argument that some of them are also housing very reasonable two-wheeler EV businesses. Now that Ola Electric has also filed for IPO, Street may start assigning some value. Up till now, it was all housed under one and was only getting the ICE engine valuation. How do you see the two-wheeler argument?
I think that definitely there will be a premium for some time before the EV pack. The point is that how far in an urban scenario, I think EV will definitely take a lead because there are enough charging points. People are very conscious about pollution and on short distance. But in a rural two-wheeler demand, where the distances are larger, where the roads are not so good, there is a lot of shock absorbers that you need. I think there EV as a story, we have to wait and watch. So I would say that the market would tend to get a bit ahead of itself because of the promise and all the talk about it. I would expect valuations to go ahead, and hence EV component would get a higher premium. That's undeniable in the market. Whether those numbers actually justify this premium, the coming years would say. But from a short-term tactical point of view, it makes sense to give a preference to those which are higher up on the EV curve because that market is going to value that better. So it's a tactical call that EV will deliver better valuation upside in terms of expansion. But over the long run, I would still say that you can't write off the ICE because rural demand when it picks up and there you need rugged vehicles which can carry loads, do long distances over not so great terrain. I think that you can't write off the ICE pack, and I still think that will be the core part of the two-wheeler business for some time to come.
I wonder what the outlook is then, Sunil, when it comes to, not just Ola Electric, but the slew of IPOs as well that have recently hit the markets. It's been a hectic December and a hectic 2023 to say the least. Do you believe that there is going to be a lot more fervor within the primary markets? How have you read into financials, some of the existing players that have pulled up their stocks, valuations, etc.?
I think that, yes, the IPO market will continue its fervor. Because this whole scenario, again, is the election scenario, which has given a lot of confidence to the market participants. I think penetration of equities as an asset class, new IPOs, I think that's going to be a rage for some time, and you would see a froth in that IPO market. You can't help it. That's the way forward for the next few months. Plus, the fact is that even within the mutual fund, if you see the SIP book, I see that almost 30% of the SIP book is in small and mid cap space, plus you have another 30% in multi cap. So roughly half of the SIP book of 17,000 crores is available for buying in the smaller end of the cap curve. And so even mutual fund institutional participation in the IPOs, they would be having the money to deploy in good quality IPOs. So I see the IPO market, doing very, very well in terms of listing gains and those kind of stuff. But over a period of 6 months to 9 months, these IPOs would have to demonstrate the value proposition and there would be fluctuations in their price. So I would say that from a longer term perspective, yes, it makes sense. But in the shorter term, I think there would be a lot of post-listing fluctuations. So retail investors should be careful about what they do with their IPO if they get an allotment. So I think otherwise, I see the strong domestic flow coming into support, and that would tend to be at the smaller end of the cap curve. So I do expect the IPO market to get a lot of buying support in the coming months.
And Sunil, just before I let you go, when do you expect the hiatus for the banking index to get over? Because the large private banking names haven't done anything for this year. In fact, a lot of them are actually down on YTD basis. Do you think 2024 could be a year of big reversal for them?
Yes, but with a bit of a delay. The reason I say that is that the banks are going through this kind of existential crisis, if I may say, because what's happened is that the banks ran up on the widening NIMs post-COVID. They had locked onto a lot of long-term, low-cost money sources, whether it's masala bonds or it's domestic deposits. That low-cost base has now churned over at a higher cost, so the NIMs have slightly contracted. The second aspect is that on retail lending, RBI came down with this additional capital adequacy requirements. On lending to NBFCs, they come up with that additional capital adequacy. That also has had an effect of slightly shrinking their margins. But the story of banks is one of the corporate capex revival and banks being the lead force to finance that. Now, there two things are happening, right? One is the capex story itself is getting delayed because mass consumption hasn't picked up, so private capacity utilization has still hovered around the 75, 76 and not gone past 80. So private sector is still in the announcement stage. I don't think private capital has started. So that lending book on the corporate side is yet to pick up. I still believe it's a matter of when and not if. Second aspect, you mentioned the larger private sector. As you know, the leaders in the corporate banking lending are the public sector banks. And there, if you see, right, so maybe there's a little bit of cash flow getting diverted into those banks because they expect to take the lead. Larger private sector banks are a little more cautious when it comes to corporate lending, given that NPAs happen over medium term and all of that. And hence, you are not seeing the buying support from the market for these because they're just factoring in all of these. But your point is right. I do expect that sometime over the next year, it may not be in the first half, but towards the second half, when I expect capex to pick up, you'd suddenly see that there'll be an expectation of lending, credit growth going up. And corporate lending is generally at decent margins because to the small and medium sector, right, they are not in the position to negotiate rates with the big banks because the loans are big ticket. So banks should generally have the upper hand in able to decide pricing. So yes, sometime over the course of 2024, I do expect banks to step up. So if you have a medium-term perspective, this period of consolidation in the banking space is an excellent time to buy good quality banks. But you have to hang in there. It's not going to happen overnight. I think it's going to take a bit of time, but it's still 35% of the large cap index. So I think it's a play which will get support from the passive flows both outside and within India. So it's not going to go through any correction or anything in my view. So it's a good place to hang in there, keep accumulating on corrections.
All right, keep accumulating those banks on corrections. That's the advice coming in. Good to have you on board, Sunil, and wishing you season's greetings and a very happy new year from Team ET Now.
Thank you. Same to all of you. Thank you.